Hello, everyone. Welcome to the first live session of the week. Let me just get the risk warning up while I'm doing the introduction. A lot has happened since last week. We're going to start with gold this morning, or this afternoon, because it went plunging below 1300 on Friday. So we're going to start off with that. It's a really big week this week in terms of major announcements. I mean, it all culminates on Friday with the latest US non-farm payrolls data. So the monthly unemployment numbers are out on Friday. So we'll cover those live. So we'll start Friday's session at 1:15 because the number comes out at 1:30 UK time. But before that, we've got some UK PMI data tomorrow morning at 9:30, Australian GDP midnight Wednesday morning, Thursday morning, European employment data and European GDP, and at 12:45 on Thursday, the latest interest rate decision from the European Central Bank. So it's a really busy week this week. So let's see what happens. I think that risk warning's been up long enough. But let's start with gold. So if you're new to these, what we do normally, we look at all the major markets. So we'll take a look at the euro, the pound, gold and oil, and various stock market indices. And stock markets have had quite the move overnight as well. So a lot has happened since we looked at everything on Friday. But I thought we'd start with gold because we have seen quite a drastic move. There's a couple of questions coming in. How do I sign up? If you want to sign up for an account, go to Capital.com. In terms of signing up to not miss these live sessions, if you subscribe to our channel, so you click on the subscribe thing on YouTube and click on that alarm bell, excuse me, you'll get a push notification off YouTube when we go live. So you never miss out on all of this stuff. Okay, gold, here we go. So let's just have a look really at what happened on Friday in a bit more detail, because it was, whenever we did it, what time did we do on Friday? 12:30 on Friday. 1st of March, wasn't it? So we're around about here. So gold was trading around about below 1305, that sort of area. And I said it was going to be interesting if the price pushed lower, we'd expect to see some sort of support ahead of 1300. That proved completely wrong. The price went sailing through 1300, and so far the lowest we've been this morning, so within the last hour, I think the price of gold has been as low as 1285. So we have seen in the last couple of weeks, it's a major turnaround in the gold price. You know, it had hit, I think, was it a 10-month high, pretty much up at 1345 on the 20th of Feb. So in a little over a week, we've seen a massive turnaround in the price of gold. But I think it's interesting because, you know, we've been tracking this recovery in the price of gold since the August lows, and it's been chugging along quite happily. We had the third test of the trend line back there mid-November, and the price has accelerated since then. You know, so we've gone from mid-November, $1,200 an ounce, up as high as $1,340 in February. And you know, I've been saying we were waiting for the pullback, and we weren't really getting any decent pullbacks, but now we have. And the reasons behind this, it's a bit shady actually. There's no clear indication, but I think I think stock markets continue to do well towards the end of last week. So there's a bit of a increased appetite in risk for investors as stock markets have continued up. The dollar gained as well, and of course gold moves inverse to the US dollar. And the catalyst for all of this, I think, was better than expected US GDP numbers. So the US economy performed a bit better than expected in the last quarter, which has led some to think, well, maybe we'll have more rate rises than we were thinking about from the US central bank, which is good for the dollar, which is bad for gold. So I think that's a compilation of the reasons being given why we saw gold weaker on Friday. But I think this could well be an opportunity. You know, for me, I've still got gold as a sort of a medium to longer term position for the rest of this year based on this recovery. So I've been buying in a few times in various places. And for me, I think for now at least, I'd be looking for a bounce back. So the question is, where's it going to bounce back from? Well, you know, 1300 was a non-event. Just went sailing through 1300. So for me, the next big area of focus is going to be the lows before it broke above 1300. So let's just pick up on those and have a look at it in a bit more detail. So it's roughly around about 1275. It's the lows for the year so far. So January lows for gold, yeah, 1276, and then back here 1276 again. So let's call it 1275. I think for me that's the next area to watch. I would not want to be a buyer today because the price is still falling. In the last hour we've seen it set a new low for this down move. Looking at the RSI down here, it has gone oversold. Again, not surprising given the scale of the move. This is the most oversold the RSI has been. We've got to go back to August last year, those lows. So the 2018 lows for gold. This is when we were this last oversold. So at the moment, it is all pointing back to some sort of recovery, but I think the price action is telling us not quite yet. There we go. So there's our hourly chart on gold. So what would we look for? Well, I think for me, the most cautious approach is to maybe wait for a move back above 1300. So I think that if we're looking for a bigger recovery in gold, maybe back up to those highs from last year, sort of 1360, that sort of area, is to wait for it to reclaim the 1300s at the moment. Maybe the more aggressive strategy is wait for it to at least have a positive day. You can see we've had 4 red candles now. We've had 4 down days in gold. So it has been really weak over the last 4 days. So at the moment, at least wait for it to have one day where it turns around, then buy in with a stop loss underneath whatever the most recent low has been over recent days. So let's see. So for me, it's going to be a really interesting week to watch gold, particularly with the payrolls on Friday, giving us a bit more insight into the US economy. So let's see what happens. If it loses 1275, and at the moment I'm saying I'm expecting 1275 to be support. If it goes below 1275, clearly the risk then is for a deeper sell-off. And I think the next big level is going to be this trend line, probably the trend line from August last year. So it's what is it, 6-month trend line now, around about 1240, which does sort of coincide with these highs from October and early November last year. So it's been really interesting. It's a bigger move down than I was expecting, certainly. But maybe it's a buying opportunity. Let's see. Let's see what happens over the next few days or so. But I think it's going to be a really interesting market to watch this week. So that's oil, that's gold selling off, but that big recovery trend still going. As we're on commodities, let's take a look at crude oil. I think is it fair to say it's been a bit of an odd market over the last few weeks? Maybe. I mean, it's trading at the moment, the oil price. This is the daily chart we're looking at. So it's trading about $56.50 a barrel. This is pretty much where it was a couple of weeks ago. It did, I think, very briefly on Friday, nudged out just above $58. So we've got the high showing at $58.04. If you look at the top left of my screen, those red numbers there, you can see 58.04 was the high. So it nudged through, but it's reversed off it really quickly. The recovery is still going, and the recovery off these lows at $42.50 from Christmas Eve last year, but it has really struggled to gain any momentum really on these various breakouts. I think from a short-term trading point of view, let's flip it over to the hourlies. From a short-term trading point of view, I think it's still a buy the dips market. So let's say it sells off one day, looking to be a buyer, looking for it to recover over the next couple of days is a perfectly sensible strategy. This time last week when we were looking at oil, it sold off really heavily on a tweet from President Trump about oil being too overvalued, too expensive. It sold off really heavily, but found support over the next couple of days at 55 and rallied $3 and out briefly to fresh highs. So we've sold off again eventually on Friday afternoon, but again stabilized a bit today. So again, an aggressive trade. If we thought it's going back to 58, the closest I would want my stop is below the low of today, so below 56, but arguably a better level is below the low of Friday, so below 55.75, and then after that we've got support back down here at 55. So I think we're still positive, but I think it's maybe the opportunities are more short term. It was a great, if we managed to get in on the recovery from those December lows. We had some great trend up into the middle of Jan, and it has pushed higher since, and we've had some good moves like the middle of Feb here, but a lot of it has been fairly scrappy trading. So for me, I think we will have another look at 58, assuming these levels hold. But for now, I think 55, the big support from last week, and the really short-term support, sort of 55.75 from Friday. And I just think we'll see this in stock markets as well in a minute. But just looking at the bigger picture for oil, I just wonder if maybe we're getting back to an area that has been something of a problem. We've been talking about this a bit over the last couple of weeks, but I think 58 to 60, if we zoom in, let's just zoom in on what was going on in November last year. The price rallied for 5 days, couldn't really get much above 58, which is what we're seeing now, and then just sold off again, carried on selling off. So I think where we are now is a logical place for it to think about taking a pause, $58 to $60 from a medium term point of view. So let's see what happens. But in the short term, still I think that any sharp sell-offs that we get, like Fridays, it moved. What did it move? It moved 57.70. It moved $2 in 2 hours on Friday. So I think sharp sell-offs still look like buying opportunities over the next couple of days. But I think the bigger picture, maybe it will start to struggle now up at $58 to $60 a barrel. Let's see what happens. And of course, on Wednesday this week, we have oil inventories. So Wednesday afternoon, 3:30 is the major announcement for oil. Then the payrolls on Friday. So let's see what happens. Let's see what happens next. Okay, let's take a look at currencies. I think last week, we look at the pound and the euro. Clearly we are now within 4 weeks of when the UK is meant to leave the EU. And we're still, I think, no clearer as to what is actually going to happen. And I think we are seeing that caution reflected in the FX markets. We have maybe half decent day-to-day volatility. This is pound US dollar we're looking at, but we're currently trading pretty much where we were a week ago. So I think it's not surprising that there's a lack of commitment in either direction, given that we don't know what's going to happen over the next few weeks. So I think we're seeing, pretty nervous markets, understandably. So, from a positive point of view, the pound did hit its best level in since July of last year. So at the end of Feb, we saw it. But I do think this, like we've picked up before, 134 to 135 is a real barrier for pound US dollar. So I still think that unless something ridiculous happens, we'd still expect to see the pound maybe gain ground over the next 6 months. But I think the next month is the next few weeks are really uncertain because of all the Brexit stuff that we don't know about. But let's take a look on the hourlies to look at some levels, for the rest of this week. I think an obvious one to look at, 131. So 131, so what, about 100 points below where we are now. The market had a real problem with that. Third week of Feb, broke above. I think if we saw it sell off from here, watch 131. A real short-term level is the lows from Friday, around about 131.70. But I just think it's just a real choppy, messy market until we get some direction on Brexit. The euro, I've been complaining for a while just about the lack of volatility we have in the euro, its inability to hold on to any recoveries. And we've seen that again. We saw a good recovery from the middle of February, from the low 112s on euro dollar up as high as 114.20. But again, over the last few days, it's rolled over and it's dropped back 90 points. Again, euro, if you really wanted to buy the euro, we've got we've got good support ahead of 113, around at 113.15. So there's an argument, if you thought, well, actually, we can have another squeeze up to 114, where it's pushed back to now, it's been pretty good support. But again, it's one of these markets. If there's nothing, no news coming out, there's no volatility, then suddenly we get a bit of Brexit news. the market has a move and then just goes dead again, and you're either the right side of it or you're not. So I think it's still a difficult market, but arguably a clearer level to trade off on euro US dollar. Here's the daily chart for the euro, and you can see we keep coming back to it, but just how low volatility has been since November now. Traded pretty much in a 300-point range over what, 4 months, 4.5 months. So volatility has been pretty non-existent. The big level is still 112 for euro US dollar, but I think once we know what's happening with Brexit, and once the dates of us leaving, assuming we are still going to leave, is out of the way, these markets should return a bit more to more normal trading. But it's not surprising we're seeing it so nervous. Right, stock markets. A lot's happening in stock markets, particularly overnight. Let's start off by looking at let's look at the S&P first of all, then we'll look at the Dow, and we'll look at the European markets as well. So even though the US stock market, the official open is 2:30 this afternoon, so in just under a couple of hours, the US market opens. There is, of course, a 24-hour market in US indices, and these open on a Sunday night. So this is why I'm starting off just looking at a short-term chart. So this was the move last night. This is 11 o'clock last night UK time, when Asian markets open and the US out-of-hours markets open. So the S&P 500, the broader US stock market, closed on Friday around about here, 2804, 2805. And then you can see what happened overnight. It's gapped higher. Okay, so in the 24-hour market, it opened about 10 points, the S&P, higher than Friday's close. It's gone a bit sideways since then, but it is forecasting a really positive start to US stock markets today. And if we flip this out to an hourly, then we'll get back to the dailies. Here we go. So it actually opened in Asian trading on new highs for the year. Okay, so assuming it can hold these levels going into 2:30, we'd expect US indices to make new highs for the year during today's official session. And then the question is whether they can hang on to it. So there's our hourly chart. But I think again, it's all interesting now up here. We were looking at these levels last week. Look at where we are. So this is the daily chart for the S&P. We'll take a look at the Dow in a minute. We are bang on the highs from the last quarter of last year. So when we were last up here last time, this is where investors threw in the towel and decided that stocks were too expensive. And then we saw that massive sell-off into Christmas in US indices. So basically, if they're going to run out of steam anywhere, then we're here. So I think we're in for an interesting week. You'd expect us to have a bit more backwards and forwards trading here, but if we can clear these old highs, you know, the target is the all-time highs set in sort of September of last year. You know, I don't think, famous last words, we're just going to go sailing through these highs, you know, because the market really struggled and eventually gave up October, November, December last year. So I think we're in for a really interesting week. But I think it shows how positive these markets are, that it's opened, gapped open in Asian trading again. So let's see what happens this afternoon. But you know, clearly, I think if we did see markets come under pressure, just watch the lows from the end of last week on the S&P running from 2780 through to about 2790. You know, if we saw it sell off this afternoon, completely expecting some sort of recovery if we push back to these lows. But it looks like we're set for a really positive start this afternoon for US stock markets. Take a look at the Dow, same sort of thing. I think interestingly, here's the gap again. Here's the gap. So on Friday finished about 26,050, and it opened about 50, 60 points higher in Asian trade last night. But interestingly, for the Dow is only 30 stocks, remember, is still below its highs from February, so 26,250. So I think stock market's famous last words are going to have an interesting week. So on the Dow, the big levels to watch are going to be 26,300 through to 26,000. So these were the highs in the last couple of months of last year. So 26.3 is the level to keep in mind for the Dow, and currently trading just above 26,100. You can see just how overbought these markets have gone. With the size of the recovery we've had, they've been overbought since Jan. So we're 6 weeks into overbought, and the market keeps going up. But I think, definitely a bit more to and fro this week than maybe we've been used to. And the DAX, to bring it back to European markets, same thing for the DAX. So again, last night, let's just flip it over. Actually, no, not last night. Sorry, it's this morning. So our DAX started trading this morning, gapped higher. So at 7 o'clock this morning, that's when our DAX opened at 11,660 after closing at 11,638-ish. So again, about 20, 30 point higher gap on the DAX this morning, and the highs from last week on the DAX around about 11,700. So interesting. The S&P seems to be the one that's had the more extreme moves, and maybe that was a little bit overdone, but it could make for an interesting session today, as we do have these big hurdles just above where we are now. So there's a few questions coming in. I'll go through the questions now, and we'll take a look at some of those markets. But for me, the interesting markets to watch: gold, because it has plunged so heavily, but expecting some sort of bounce back there, but we're not getting it yet. See what happens. And stock markets, because we are banging up against these highs from the last quarter of last year. So I think we are in, famous last words, we're in for an interesting week. You watch, it'll be really dull now, and I'll be forced to eat my words on Friday. But I think with the payrolls coming out on Friday, it could be some half decent moves this week. Okay, someone's asked for coffee Arabica. Well, I think we looked at that last week, didn't we? Hang on, where is it? Let's have a quick look at that. Coffee Arabica. Let's have a quick, bring that one up. I can't remember what I said. What did I say? I think I was saying that maybe if you really fancied a punt on coffee, then there was it's been going down for years, isn't it? We went right back to 2014, these 2014 highs at about 220, and it traded below $1 recently. And I think it was saying, well, clearly that massive trend is arguably still just about down. It did have a good rally last year, came back. But again, if you really wanted to be a buyer with a stop loss either under the low from Feb, or the better stop loss is maybe the other side of these September lows. So for now, at least, it's still pointing to recovery. Let's keep coming back to it and see what's going on. I think it's moved a little bit higher since last week. So we last looked at it. Let's take a look at it maybe at the end of the week. But there is an argument that we could see it flip above $1, maybe longer term, push back up to October highs. So let's see. Oh, you're saying the weekly chart. Let's have a look on the weekly chart. Sorry. There we go. The weekly chart. I mean, this is, I suppose, this blue candle, this is just happening, and it's only Monday, isn't it? So maybe if we're going to trade off the weekly chart, we want to see where this week finishes. So let's have a look on Friday. If you're looking at it at the end of last week, there you go. It still looks a bit negative. It still looks negative, doesn't it? Because we had another down candle this week. Let's see. Or am I talking? I'm talking. This is why I shouldn't look at markets. I'd never look at. That is last week's candle. Apologies. So it hasn't opened yet for this week, coffee. So we did have a positive week last week. It held above the lows of the week before. So it does make the argument, I suppose, if you wanted to be a buyer, then it does add maybe a bit of weight to maybe we'll see some sort of recovery. Let's see. Clearly, that's not financial advice. I don't think I've ever traded coffee, but I think it's interesting that we are seeing it hold above of these old lows from September of last year. Where do you find information out before the markets move, or hints and tips so you get a bit of a heads up? I think things like economic calendars are always an important one to watch. For example, this week's major event is the payrolls on Friday. So non-farm payrolls, 1:30 on Friday, is the US unemployment numbers. So you'll often see volatility off the back of that. But very often the first move will be the wrong move. Personally, in these sort of sessions, I think it's Christopher asking this question. We look at things like trends and big levels, that sort of stuff. Yeah, but to be aware of when there are major news announcements coming out and see how the markets react. But I'll talk a bit more in Friday's session about trading news announcements like non-farm payrolls. So if you're around on Friday, we'll talk a bit about that then. But if you're not around on Friday, the recording of it will be available from about 2 o'clock on the YouTube channel. Can you please tell me about platinum? Let's have a look at platinum. I'm guessing with gold being so weak that you'd expect the other precious metals to have taken a bit of a hit as well. So let's take a look. Let's flip this back to a daily, because we've looked at silver a couple of times, haven't we? And platinum's it's an interesting one. I mean, if you go all the way back to was 2008. So 2008, the high is up at what 2,100, and then since then we've just had this steady decline. And I suppose it depends on. Let's try and just start with the basics first and look at something like trend. You know, if we were going to pick up on that, a bit like silver, it looked like, so this is a daily chart. It looked like it was trying to break out, and it's failed. So I think there are a couple of ways of trading this. I think if you thought, okay, the weakness in platinum that's been in place for years now is still there, then we've arguably got the perfect place to sell short. You know, we've had it break above that trend line, but it's failed to break the November highs. And November highs for platinum around about 880, and it's currently trading at 836. So I suppose an aggressive trade is you're a seller with a stop loss above the highs from the end of February. So I think that's one way of looking at it. And it has been an incredibly weak market. You know, it hasn't enjoyed the sort of recoveries that we've seen in gold. If you thought, though, that actually this trend is starting to change, and we have seen it, you know, we haven't seen it make a low since August when gold made a low. Again, I think that maybe the way of playing it is to be patient, see where, like with gold at the moment, see where the price drifts off to. Let's say it drifts down towards 800 and we see strength coming back in, then there's an argument for being a buyer and looking for a move back up to there. So I think it all depends on whether you think that downtrend for platinum is actually over. You know, and you'd have to say at the moment, given how long it's carried on for, maybe be unwise to bet against that downtrend for now. But it'll be interesting to come back to and see what happens. You know, but clearly with gold getting hit on Friday, a stronger US dollar, that has filtered through to other markets such as this. Let's take a quick look at silver while we're on the metals, because we looked at that a bit. Yeah, same sort of thing. There's the move in silver. So again, it went from just above 16 to back to the low 15s again. So again, everything getting hit with that US dollar strength on Friday. So we'll see what the rest of the week brings on this, and maybe if you're around, we can have a look at these later in the week. But I think the immediate market to look at, stock markets going into this afternoon, because of that gap opening in Asian trade last night. Can it hang on to it? At the moment, it looks like the S&P is set to start at fresh highs for the year. Let's see how sustainable that is. But I think any weakness still looks like a buying opportunity, particularly if it slips back to Friday's lows, whatever Friday's lows were. This is the S&P. So there's the gap. If it slips back into the zone from Friday, still looks like an opportunity. And over the next couple of days, the price of gold, because it got hit so hard on Friday, expecting that to bounce back, but it's not doing it yet. Okay, we'll wrap things up there. So as usual, actually, I might not be able to do this tomorrow because I might have to be away from the office tomorrow. But if you're subscribed, you'll get a push anyway. So either way, we either do it tomorrow or we'll definitely be doing it on Wednesday. So to not miss out, if you subscribe to this channel by clicking subscribe down there and the alarm bell thing, you'll get the push when we go live. To find out more about the company, go to the website, Capital.com, and we'll see where we are over the next few days. Thanks for coming along, and hopefully see you later in the week.